Well, time now for our special segment, Banking on the Budget. Today we focus on what the financial services sector is hoping for and the markets at large. We've got Ajay Srinivasan, Chief Executive at Financial Services at Aditya Birla Group. He joined us earlier with his views. Now, one of the biggest challenges, of course, considering the political and economic turmoil that the government is being faced with, will be to control a deficit as well as fuel growth. In the slide, what are the three main things that you are expecting from the budget? Do you believe the timing of the budget is right for big ticket reforms?
I think fiscal consolidation, in my view, will be a key theme of the budget, and that will be my first theme, if you like, because I think if you look at gross tax to GDP ratio, it has clearly fallen from FY8 to where we are in FY12. I think if you look at the deficit to GDP, our expectation is we'll probably overshoot it by about 1%. So I think to get the fisc and consolidate the fisc, in my view, is certainly going to be theme number one. I think theme number two is likely to be some sort of a strategy on subsidies, because that is really where a large part of the miss has happened this year. And if you look at next year, I think the budget is likely to be sensitive, especially in the area of oil subsidies and the likely food subsidy that's going to come. And I think the third area is going to be any kind of reform that can kind of set the economy back on a growth path, because I think the tussle between consolidation and growth will clearly play out this year.
Right, Mr. Srinivasan, the budget needs to definitely spare a thought to investments this time as well. Do you think India's high savings rate has the potential to actually deliver a sustained near 9% GDP if adequately channelized going forward? And in what avenues can it be channelized through the budget?
Yeah, so I think if you look at investments, there are probably two ways of looking at it. On the one hand, I think the growth of investments has really slowed, and that's a concern, because if you look at the period we were growing at 8.5–9%, investments were clearly growing significantly faster than they currently are. Gross capital formation was significantly greater than what it is currently. So I think if you're looking to get back to 8.5–9% growth, then the growth of investment has to pick up. But the second angle I think that's important to look at is India is one of the few countries today that still invests about 35–36% of its GDP in investments. And we have a savings rate that's broadly equal. So our current savings is broadly able to finance our investments. But if you want growth to pick up, and if you want growth therefore to get to a higher trajectory, perforce investments will have to increase. And then the question to ask is really, how do we fund that gap in investments? How much can be funded domestically? What are the other sources that can be used to fund that extra amount? And how much will have to come from outside our country?
Right, now there is also a proposal to tax customers at policy maturity, or the EET, exempt tax method for investment assets. Is this expected this time around? How do you believe it will impact investments and the markets?
So I think that's really the way the DTC was being framed and the way it was going forward. My sense is that we really need to look at how we boost savings into capital markets and long-term savings. I think that's a very important part, because if you look over the last year and a half, I think one of the trends that's been a bit disturbing is the increase in physical savings as opposed to financial savings. Now, physical savings is real estate, it's gold, it's stuff like that, which doesn't always find its way back into productive uses in the economy. So I think policy and tax making needs to make sure that it can incentivize people to put money into long-term sources of savings, so the savings that actually exist in our country can be diverted to productive uses. From that purpose, now I think insurance is a very important part, because insurance is really a long-term savings vehicle, and therefore whatever can be done to actually incentivize it, I think will be a good thing.
Ajay Srinivasan there, Chief Executive Officer of Financial Services at the Aditya Birla Group, with his expectations on the budget. We'll slip into a break here on the show, but coming up ahead, more corporate news. Stay with us.